Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news the US Federal Reserve is meeting to review its monetary policy settings, and uncertainty levels are high and rising, both on the growth and the inflation fronts there. But first, as we noted yesterday, China's State Council has launched a special action plan to boost domestic consumption, including increasing residents' income and establishing a childcare subsidy scheme. The plan came a week after the Premier's work report to the National People's Congress, which focused on boosting household spending to cushion the impact of weak internal demand. This had a notable impact on many, mainly Asian, financial markets. Meanwhile, China released an important set of recent data overnight. Their new home prices in 70 cities dropped by 4.8% year-on-year in February, easing from a 5% decline in January. This marked the 20th consecutive month of decreases, but represented the softest pace since last June. For second-hand home prices, they are down 7.5% year-on-year. China's retail sales were up 4% in the January-February period, a better rise than for any month other than for October recently. And China's industrial production was said to be up a strong 5.9% in the same period. However, that doesn't quite square with their electricity production, which in the same period was down 1.3%. Singapore's exports recovered in February after a disappointing January data. They were up 7.6% after falling 2.1% in January. However, that bounce back was weaker than analysts had expected. They wanted 8.7% bounce back. Indian exports were unremarkable in February, coming in at just under $37 billion and still low for an economy of this size, certainly one that is booming. In India, it's all about internal demand. For reference, India's exports were $41.4 billion in February 2024, so a shrinkage of 11% on that basis. They may be looking for new markets to shore up this weak performance. And legendary investor Warren Buffett once said his strategy is to be fearful when others are greedy and greedy when others are fearful. Right now, market fears are high, in fact extreme. So what is he doing? He is raising his stakes in Japanese trading houses. US retail sales in February were a disappointment. They fell 0.2% from January when a rise was anticipated and are now 0.9% lower than year-ago levels. On an inflation-adjusted basis, it will be worse than that. January data was soft too and revised lower. 7 of the report's 13 categories recorded declines, including car sales on a year-on-year basis. This data is consistent with earlier data indicating defensive consumer attitudes. A fear retreat by American consumers will likely have more of a global impact on trade and consumption than tariffs by themselves. That same hesitancy also shows up in the NAHB Wells Fargo Housing Market Index, which fell in March to its lowest level in 7 months and below what was expected. Current sales conditions fell sharply. Sales expectations in the next 6 months held steady, however, while traffic of prospective buyers dropped sharply too. And not helping is that builders' cost uncertainty is rising. It is even tougher in the latest update of the Empire State Factory Survey by the New York Fed. This is often a volatile survey, but the March results record the largest pullback since May 2023. New order intake levels were particularly weak. Capital spending was very weak too. The New York Fed called the retreat significant. But at least national business inventories in the US in relation to sales activity are still within range, even if they did rise in February. In Canada, housing starts fell 4% in February to an annual rate of 229,000 units, down from a 239,000 unit level in January and below market expectations of 250,000. Less trade has seen the OECD trim its 2025 and 2026 forecast for economic expansion. Annual GDP growth in the United States is predicted to slow from its 2.8% 2024 pace to be 2.2% in 2025 and 1.6% in 2026. China's growth rates are slowing too, but they do expect improvements in Australia. They see inflation rising to above policy target levels everywhere. New Zealand gets no mention in this update. The US Treasury 10-year yield is now at 4.30% and down 2 basis points from yesterday at this time. And the price of gold will start today at just on $2,994 an ounce, up another net $9 from yesterday. And oil prices are up 50 US cents at just on $67.50 a barrel in the US, while the international Brent price is now just on $71 a barrel. And the Kiwi dollar is now at 58.2 US cents and up 70 basis points from this time yesterday. That is its highest level since December the 10th. Against the Aussie, we're up 30 basis points at 91.2 Australian cents to a similar 3-month high. Against the euro, we're up 40 basis points at 53.2 euro cents. That all means our trade weighted index starts today at just under 67.3 and up 50 basis points to a 2-month high. And the Bitcoin price starts today at $83,439 and down just 0.2% from yesterday. Volatility over the past 24 hours has again been modest at plus or minus 1.2%. You can find links to the articles mentioned today in our show notes, and you can get more news about the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.